Good day, everyone. Let's look at the Bitcoin. Just want to check out the long-term inflows and also macro conditions that affect Bitcoin, the price of Bitcoin, and like just kind of see how the network is growing, and just kind of look at the some information on Bitcoin using artificial intelligence, using AI. Because I had some questions, like, I just kind of strengthened my conviction in Bitcoin because I've been investing in Bitcoin for some time. Not for a real long time, but a significant amount of time now. And, it's a very volatile asset. And so you kind of have to expect kind of a up and down in the short term, and then if in a matter of a few years, based on market conditions, and but in the long term, I think it's there's a lot of money going into the asset class long term. So I asked Copilot, is there more and more money going into Bitcoin over the long term? The answer is yes. The long term trend shows increasing capital flowing into Bitcoin, driven largely by institutional inflows, ETF demand, and long term holder accumulation. Long-term inflows are rising. Multiple independent data points indicate that more money has been entering Bitcoin over multi-year horizons. Institutional inflows have been strong and sustained. Crypto investment funds saw 1.2 billion in inflows in a single week, with 933 million going into Bitcoin, pushing Bitcoin's assets under management to 155 billion, the highest level since February. Capital inflows over the last 18 months reached 625 billion, surpassing the total inflows from Bitcoin's first 15 years combined, 435 billion. This reflects a dramatic acceleration in long-term capital entering the network. Spot Bitcoin ETFs continue to attract billions, with repeated multi-week inflow streaks. These ETFs have become a major channel for institutional and retail investment. Long-term holders are accumulating. Bitcoin's long-term holder supply has surged to 4.37 million Bitcoin, more than doubling since early 2024. This indicates that coins are moving into illiquid, long-term storage rather than being actively traded. So this is kind of where I'm a long-term holder, and I'm kind of a long-term holder since 2024. Long-term accumulation has outpaced exchange inflows, tightening liquid supply and signaling strong conviction among both institutional and retail holders. What this means? Overall, yes, more money is flowing into Bitcoin over the long term. The combination of sustained ETF inflows, record-breaking institutional participation, rising long-term holder balances, and multi-year capital inflow growth all point to a structural increase in demand committed to Bitcoin. Short-term fluctuations still occur. For example, spot demand can lag even when ETF inflows are strong, but the multi-year trajectory clearly shows expanding investment. So the AI asked me a question. I answered the question. I want to learn more about long-term adoption trend. Yes, the long-term trend shows growing Bitcoin adoption, driven by rising institutional participation, expanding market valuation, and structural and macroeconomic forces. What the long-term trend looks like across multiple independent analyses, Bitcoin's adoption trajectory is rising, not flattening. Institutional adoption has surged in 2024, especially after spot ETF approvals. By 2025, 86% of institutional investors were allocating to digital assets, reflecting a major shift in mainstream acceptance. Market cap growth signals expanding adoption. Rising market cap is interpreted as increasing liquidity, confidence, and capital inflows into the network, a key indicator of long-term adoption. Post-halving scarcity and regulatory clarity have strengthened Bitcoin's role as a macro asset, encouraging broader participation from institutions and corporate treasuries. Together, these factors show that Bitcoin is not just experiencing cyclical hype, it is structurally integrating into global financial markets. Why adoption is increasing. Several forces are pushing Bitcoin's long-term adoption upward. Number one, institutional momentum. Spot ETFs, clear regulations, and large asset managers, for example, BlackRock, have made Bitcoin accessible to traditional investors. This has created a steady pipeline of capital inflows. Number two, macroeconomic tailwinds. Bitcoin increasingly behaves like a macro-sensitive asset. Lower interest rates, inflation hedging narratives, and global liquidity cycles have all contributed to rising demand. Number three, market maturity. Bitcoin's market cap is now used as a serious valuation metric, helping analysts compare it to gold, equities, and other asset classes. A rising market cap reflects growing adoption and network maturity. Number four, long-term accumulation behavior. Analysts note that Bitcoin's consolidation phase 2026 often reflect accumulation rather than weakness, with stronger hands absorbing supply. This is typical of long-term adoption cycles. How analysts interpret the long-term trajectory. Across forecasts and on-chain analysis, Bitcoin is increasingly viewed as a long-term strategic asset. Institutional inflows and post-halving supply compression are expected to drive continued adoption. Long-term projections, 2026 to 2030, consistently assume higher participation in capital inflows, even though price targets vary widely. The key point, adoption is expanding even when price consolidates. And what this means for understanding adoption. If you're studying Bitcoin's long-term trajectory, the most important signals are market cap growth, shows expanding economic footprint, institutional allocation rates show mainstream acceptance, regulatory clarity reduces barriers to adoption, accumulation patterns show conviction among long-term holders. All of these are trending upward over multi-year periods. So then I asked him the question and I responded, and I wanted to learn more about macro forces driving Bitcoin's long-term trajectory. Bitcoin's long-term trajectory is shaped by a handful of powerful macro forces, especially global liquidity, interest rate policy, geopolitical shocks, and the strength of the US dollar. These forces consistently influence demand for risk assets like Bitcoin. The macro forces that matter the most. Number one, global liquidity cycles. Bitcoin tends to rise when global liquidity expands and struggle when liquidity tightens. Global M2 liquidity hit an all-time high of 134.4 trillion in early 2026, but most of that growth came from China, whose restrictions prevent much of the liquidity from reaching Bitcoin. This mismatch explains why Bitcoin fell even as global liquidity rose. Liquidity contraction is one of the strongest Bitcoin predictors of Bitcoin corrections, as speculative assets are the first to be hit when money becomes scarce. Why it matters. Bitcoin behaves like a high beta macro asset. Abundant liquidity fuels rallies, while tightening drains demand. Number two, interest rates and Federal Reserve policy. Rising inflation in early 2026 pushed U.S. CPI from 2.4 to 3.3%, reducing expectations for Fed rate cuts. This weakened Bitcoin's recovery. Conversely, rate cut cycles historically support Bitcoin by increasing risk appetite and lowering the opportunity cost of holding non-yielding assets. Why it matters. Bitcoin thrives in easing cycles and struggles when rates stay higher for longer. Geopolitical shocks. Geopolitical events repeatedly trigger volatility in Bitcoin. The U.S.-Israel strike on Iran pushed oil to $118, spiking inflation and delaying rate cuts, a negative macro shock for Bitcoin. The Strait of Hormuz tensions in 2026 caused short-term pullbacks despite strong ETF inflows. Wars and global tensions often cause macro funds to reposition, affecting Bitcoin flows. Why it matters. Bitcoin is increasingly integrated into global macro trading, reacting to the same shocks that move equities and commodities. Number four, strength of the US dollar. Academic research shows the U.S. dollar is one of the strongest long-term macro drivers of Bitcoin. A stronger dollar negatively affects Bitcoin's price and market cap. Gold also influences Bitcoin, but the dollar has a larger impact. Why it matters. Bitcoin often weakens when the dollar strengthens, reinforcing its role as a global risk asset. Number 5, inflation and commodity shocks. Energy shocks like oil spikes raise inflation expectations and delay monetary easing, both of which suppress Bitcoin demand. The 2026 oil spike delayed expected Fed cuts and slowed Bitcoin's recovery. Why it matters. Bitcoin is sensitive to inflation via interest rate expectations, not inflation alone. What this matters for Bitcoin's long-term adoption. Across cycles, Bitcoin's long-term trajectory is shaped by liquidity expansion, long-term tailwind, dollar weakness, supportive for Bitcoin, rate cut cycles, historically bullish, and geopolitical instability, mixed. Short-term volatility, long-term adoption narrative. Bitcoin is increasingly behaving like a macro-sensitive global asset, not an isolated crypto instrument. So I think I'll stop this, there. It's just kind of, we got the Bitcoin 2026 going on right now, and there's kind of been, something I've noticed, like they've had, as the interest rates go up a bit, I think that impacts Bitcoin's price a bit, and then there's a lot of events that happen, with Bitcoin, something can happen in terms of news, something in the news happens, in late 2024 after Trump won the election, then Bitcoin goes up. So it was 819 or 916 2024, 58,000, and then Trump wins the election in early November of 2024. And then the price of Bitcoin goes all the way up to 106,000, and then I got some pro Bitcoin people in the Trump administration, which is definitely a positive sign for Bitcoin. And then there's then there was a pullback, but there's a lot of another thing that happened right in here was there was a 50 basis point rate cut, Federal Reserve interest rate cut in the fall of 2024, and so that kind of and then there was another rate cut of 25 basis points in December 2024, and then there was kind of a break in it became clear there's going to be kind of a break in interest rate cuts, and then it kind of resumed in the summer 2025, late summer 2025 rate cuts. But yeah, there's kind of there's a lot of times there's the news in Bitcoin can definitely affect the price in the short term. It's very sensitive to news cycles, and people panic sell. I know with Bitcoin it seems like a lot of people tend to buy when it's going up, and then they sell when it they get all scared and panicky and they sell. Well, if the long-term trends are good, I think it's gonna be a good asset to hold for the long period of time. It's a good asset to have for greater than 4 to 5 years. You want to have you want to hold on to something. If you hold on to it for a decade, for 10, 20 years, the chances of it's 427 today, 77,000. Chances of it, if you hold on to it for a long period of time, years and years, you should, I think things are going to very likely. To me, it's a good asset to have over the long term. Anyway, I think that's what I got today. Hope you have a wonderful day. Adios.